The dollar has been the big kahuna around the globe for decades, ever since global leaders converged on a hotel in Bretton Woods, New Hampshire, in the summer of 1944 and established the dollar as the world's reserve currency. As Americans, we've benefited from having the one currency that every other country has to hold in reserve and use for most of its global transactions. But what happens when the dollar loses that top spot? And that is a when, not an if. What happens when that strength starts to fade and the dollar doesn't stretch as far as it used to? That too is a when, not an if. The dollar has enjoyed a stellar run higher in recent years, with the U.S. dollar index gaining close to 30% from its May 2014 lows to its March peak. This is a massive rally in the currency world. But the conditions that carried the dollar to those lofty heights are deteriorating, and the greenback is facing some issues that are set to end its dominance. We are looking at a Fed unable to raise interest rates. I know we've all got our hearts set on Fed Chair Janet Yellen boosting interest rates significantly and regularly, but the truth is the Fed simply can't without completely derailing the questionable recovery that we have enjoyed in the U.S., and without destabilizing global economies. A fiscally unsound economic policy. America is drowning in $18 trillion in debt, and the government's spending remains out of control. U.S. consumers owe another $17 trillion. A country's currency is a reflection of the country's fiscal health, and soon enough the dollar is going to reflect just how poor America's finances really are. The end of the dollar as the reserve currency for the world. China and Russia are building institutions and creating deals that will allow them to transact without going through the dollar, reducing global demand for the greenback. Other countries are jumping on board, including some of our closest allies. It's a glaring indication that the world is tired of a single reserve currency that offers one country outsized benefits while at the same time hurting other countries. These factors are going to drive the dollar lower against many of the currencies around the globe. But you don't have to be left out in the cold. Foreign assets are the place to be, particularly high-grade foreign stocks that pay dividends. Those assets will rise in value in U.S. dollars terms, even if their nominal price doesn't change. And if their prices are going up, then that's a double-barreled win for U.S.-based investors because you get the gain in share price as well as the gain in currency terms. And to sweeten it even more, if this foreign stock pays dividends, the value of the dividends you receive continue to rise in dollar terms as the greenback declines in value. The dollar might still have one rally left, but the reversal is already baked into the cake.